welcome everyone. I think we're ready to get started. Today we have the Diversified Passive Income team, the DPI team, here to talk about retire early through a safer, simple, smarter investment. All right, let's get started. So we have a couple other events coming up. We have, sorry about this PowerPoint. The first one is going to be structure deals creatively to get them accepted. Wednesday, February 23rd at 11 a.m. Then we have invest in commercial real estate like a pro. That's our March monthly meeting. This one will be online. That'll be 7 p.m. March 2nd. Then we'll have legacy planning, borrow smart and retire well, free webinar with Unbridled Wealth. You may have seen them before in our previous webinars. They're really, really great. This is going to be good for really everybody, not just real estate investors. Then we have Finance Your Investment Properties with A to Z Capital, March 9th at 11 a.m. Smart Home Loans, you're going to be learning more about loans and financing with Jason Clark, March 30th at 11 a.m. And finally, mark your calendars, put a big star next to this one. We have a apartment and multi-family home presentation. That will be our April monthly meeting or April in-person meeting. We're going to be meeting at the Signature Grand, Wednesday, April 6th. The main meeting starts at 7, but we have networking at 5:30. So all of you guys itching and ready to meet in person again, definitely come out to the Signature Grand on April 6th at 7 p.m. If you want to keep in touch with our with our events, you can text the word BPM-RIA to 954-800-6961, and we will only send you updates on our events, usually a couple of days before and the day of, to give you a reminder of when events are happening.
Awesome. And if you're wondering why we're running through this really fast, it's just because we have a fantastic presentation we'd want to get to, but you can always find all of our events on our website, bpmria.com. And I'm also throwing all of these helpful links in the chat for you guys for your convenience. So go ahead and check out the chat. If we're running through this quickly, we have some really good information to get to.
Yes. Thank you, Alexa.
Right.
And another event that we have coming up is our May 7th and 8th Quick Start program. So some of you guys are actually in our February Quick Start. We have another one coming up in May for those who didn't get to attend, or maybe you loved it so much you want to tell your friends and family about it. That would be awesome. If you're a member, your friends and family can also get that member discount. We'll talk a little bit more about memberships in a second. But the Quick Start program essentially is going to help you learn how to do the best wholesaling in South Florida. You're going to learn the A to Z on how to get your deals closed, how to structure your business, even how to name it, and you're going to learn how to market during the pandemic. We're always updating our information, so we hope to see you at our next Quick Start Bootcamp. Alexa, I think we have a poll, if you don't mind popping that up. So those who may be interested could probably get an email and learn a little bit more about our Quick Start Bootcamp.
I'm so sorry.
It's okay.
I have access to the polls.
Okay. We also have a membership. Our membership we have for corporate and individual members. You may be able to even host a webinar just like this one. If you have a corporate membership, if you have an individual membership, you're able to come to those in-person events like I was mentioning earlier. Those are all included. Both memberships, you get access to the National RIA Benefits Package, which gives you deals and discounts. And usually once you really utilize those deals and discounts through that benefits package, your membership pays for itself and more. We also have a mentor program. We are really kicking off that mentor program in 2022. So if you've done the boot camp, or if you really know that you want to get into real estate investing, but you want one-on-one support, this is where investors are born, and you can discover how to achieve your dreams, your real estate and entrepreneurship dreams through our mentor program. If you have more questions about that, you can always visit our website at bpmria.com to book a discovery call. You can also call this number at the bottom of the screen, 754-216-0202, and you'll be able to learn more about the mentor program and even set up a consultation for an hour for free with Anish Dave here. He will talk to you all about that, and you'll discuss your goals and such to see if the mentor program is a great fit for you, which we hope that it is. We just want to say thank you all for joining us. Thank you for our sponsors, and we hope that you enjoy the webinar. We have a couple housekeeping rules. Just remember to use the Q&A box. If you look at the bottom or the top, depending on your device, you will see a Q&A section. You can go ahead and answer or ask your questions there. We'll be getting to your questions throughout. And also stay tuned for the chat, because you're going to see a lot of helpful links and such come up through that.
Awesome. Thank you, Alexa and Alexa.
Mm-hmm.
I know some of you guys know our staff, which without a doubt has been fantastic this last year. I always get the big joke is that since they're both named Alexa and I don't have an Alexa at my house, I got 2 Alexas at the office, so I'm always pretty lucky too. So thank you, ladies, for helping us out. And so we are super excited to talk about diversified passive income. So one of the things is that, hopefully some of you guys already know me. If you haven't, my name is Anish Dave. And one of the things that, my background is, I'm a licensed real estate agent since 2002. The owner of BPM RIA, formerly BRIA, Miami-Dade RIA. My degree is in finance. I love real estate. I love investing, and I love numbers. And what I'm really excited about is that this team that we've come up with is my dear friends Taryn and Jason, who I've been friends combined for, I don't know, like 30 or 40 years between the two of you guys. And we've started this fund about a year ago, or less than a year. And what we're going to talk about today is how you could diversify your income. I know there's a lot of different strategies out there. Throughout the presentation, I am going to put up some polls just so I have an idea of where you guys are at in your investing career too. So I'll pass it on to Taryn if you don't know who Taryn is on this.
Hi, everybody, and good morning. I know it's been a long weekend, so thank you so much for joining us. I'm Taryn Ward. I've been investing in real estate for many years, about 7 years now. I have a Facebook group called Women Wholesaling Houses with over 26,000 women in it nationwide. And I'm really passionate about helping women get involved in real estate because it's done so much for my own life. And I love creative deal structures. So I love working on very problematic deals, getting them to the finish line. It's definitely challenging and it keeps me entertained.
So I'll just jump in here. I'm Jason Davis. Nice to meet everybody today. Really excited to talk about this fund. I think it's one of the greatest investment vehicles out there. So a little bit about me. I've been in the real estate business for almost 2 decades. I specialize in luxury real estate and also commercial real estate. Been specializing in assisted living facilities, freestanding buildings, everything from strip malls to you name it. So I've been in every aspect of the industry. And I'm really excited to be part of this team for great acquisitions in our future and what we're going to bring to the table up ahead. So we're going to get on and talk about this great fund. Nish, go ahead.
Yeah, so, obviously you know who we are, and we try to keep that short. We have an eclectic group as our team. We already told you what we kind of accomplished. We are also the managing members of DPI. So it's called Diversified Passive Income. Throughout the presentation, instead of me saying all those words, it's like BPM RIA saying Broward, Miami Beach, Palm Beach, geez. So DPI is what we call it. We also have our partners, Sharif Medawar, who owns MIGSIF and SFI Fund that's been around since 2009. when we've decided, some of you guys know me for some time, and what the pandemic kind of did was, for me, was also a reset button. So go ahead and put in the chat, how many people, has the pandemic made you reset your thoughts and your career path on what you're going? And what basically happened was, a lot of you guys know I always talk about having my own mentors in the real estate business. So I have 2 mentors, and I'm also part of a mastermind. And Sharif, who's going to actually be speaking in March at our club, is one of my mentors. And he always said it was really cute what you do with your little houses that you flip, right? So I said, what do you mean cute? He knows I'm competitive. And, I said, well, he's like, when are you going to play with the big boys? I was like, well, I thought I was playing with the big boys. And he goes, no, $5 or $10 million. And I was like, oh, and I've sold $5 million, apartment complexes. So I've done those deals as a realtor or as a finance guy, but never as an acquisition guy. And, I said, okay, let me, I'm going to reset. And I said, wait, let's start a fund in the middle of a pandemic with 2 of my closest friends with different expertise. Does that make any sense? And he said, yeah. He goes, of course. He goes, he actually opened up his fund in 2009, right after the Bernie Madoff scandal. Like, who in the heck is going to open up an SEC approved fund right after a scandal? And I was like, okay, fair enough. So that was the birth of our starting up the fund and doing bigger projects. So, it's always about getting out of your comfort zone. And, one of the things, and we'll talk about some of the things that we've done in between in our career. So like, it's just one of those things. Oops, sorry guys, my computer is, sorry. But so one of the things is that, when you get into, setting up a fund, first of all, as you could imagine, all the things we had to jump through, right? To get SEC approved. What do you guys think about all those documents, Taryn, Jason? We had to fill out, and the background checks and the financial
it definitely
checks.
takes something to get through it.
Yeah, that was the toughest part about putting the fund together, is the whole legalities are part of it. But after getting through all the red tape and dotting our I's and crossing our T's, we got SEC approved.
Yeah. So and I'm going to, throughout the event, I'm going to put some polls up there because I want to know who we're actually talking to. So one of the questions I have actually is, how many of you guys are accredited investors? So if you don't know what an accredited investor is, then you're probably not an accredited investor. No, I'm kidding. That's step number 1, right? So do you make over $200,000 gross if you're a single person, or do you make over $300,000 as a married couple, or do you have $1 million in assets? And when we say $1 million, that's not including your primary home. So this will give us a good idea of where you're at. Again, if this is the first time you even heard what an accredited investor means, it's okay. I remember when the first time someone said it to me, I was like, oh, what? Do I get credit as an investor? He goes, no, an accredited investor. So this will give us a good idea of who's actually listening in today. So what kind of properties, right? What's the vision of the fund? So Taryn, do you want to talk about what our vision?
Yeah, yeah, definitely. And that was the second thing, after doing all of the paperwork with the SEC, it's like, well, what do we want to invest in? What do we want to do to make these returns? And where we see the biggest value is in multifamily properties, mixed use. Our Sharif has a lot of mixed use over in Puerto Rico, where the bottom so it's at the Old San Juan, so kind of where the cruise ships come in. The bottom levels are all triple net lease with corporate guarantees. And then the upper levels he's changed into Airbnbs, office buildings and things like that. And so he's getting some massive returns in the fund. So we really wanted to replicate that model into DPI as well. And then the third one that we really like are the freestanding commercial buildings. So think about your Walgreens or your Dunkin' Donuts, things like that. We tend to like to get them when they're in a great location, but they're vacant, and then bring in the tenant and get them stabilized. And the tenant that we bring in, again, is a corporate guarantee triple net lease. So it really adds a lot of value to the property, so that after we get it stabilized, we're able to flip that out and capitalize on those gains. So that's really the vision of the fund and what we're looking to work in, possibly in the assisted living facility. I know Jason really enjoys that asset class. And so the idea with the fund is to really be diversified inside of our own asset class, right? So not just, fix and flips, which we are doing as well in San Francisco, but a variety of asset classes inside of real estate so that we're more diversified. It's a safer return.
Yeah. So when you're investing, in the beginning, you're a lender into the fund. You're investing to the fund. The fund is collateralized of different diverse assets, and then you're going to get a fixed rate return. So while we park you into the fund, we will be acquiring other assets as well, and you're building relationships with us, where we will give you equity opportunity, to have upsides in the fund as well. So not only are you making a really good return on your investments, but also you're going to have opportunity for equity and upsides on these future properties that we're going to look at, like freestanding buildings, like Taryn has said. So there's a lot of moving parts here as far as leveraging your position and actually put your money into the fund and get these fixed rates are great. We're going to continue going through this presentation and talk more about the structure of the fund and how it works, but it's fantastic. And I think by the end of this presentation, you're going to be very impressed.
Yeah, so I just want to say I did pay my internet bill. You guys are wondering. I was kind of disappearing in and out. I was in the shadows. So I know I love these webinars, but I can't control the internet here. So I kind of went in and out. So my bad. So if I disappear, it's because of my internet, and of course you're in good hands too. So.
And I thought you were just trying to test me if I remembered what was on the slide. I was.
Yeah, what slides? What are we talking about? So, it's kind of funny when that happens. And so how many of you guys are in alternative investments, right? Got to put in the chat. Do you have a savings account, money market, CD, typical banking, FDIC insured? Some of my old timers love municipal bonds. My parents actually were like, oh, we got to get bonds. I'm like, what? Maybe a bail's bonds then, I have no idea what you're talking about. Syndication. So syndication, you might have heard of what syndication is, where you get a group of investors and you try to buy a building together. And we'll kind of dive into these things. And how are you guys feeling about the stock market these last couple of weeks? If you're like me, I want to, not look at my portfolio. I probably haven't looked at my portfolio in the last, I want to say about a month, because it makes me want to throw up. But, how hard is it to find real estate deals? I know you guys have been following us. And if you're not using our techniques, what are you saying? There's not enough deals out there. What else am I do? And how many of you guys are in crypto, right? So, and how many of you really understand crypto and doing well? And then are you guys long-term, buy and hold guys? So I got some people in ETF, which is good, savings, stocks, some offshore, okay. And some crypto, okay. So, these are great alternative investments. So I definitely, and hence part of our name is also diversified and passive. So I like all these types of investments. The problem is I can't stomach all these types of investments. So, the people in the savings, money market, or CDs. Yeah, what kind of interest rate are you guys getting?
The interest rates on these, in a bond, you're going to get what, 1.85% for over 10 years. And then you have the CDs are paying 1.15% over 5 years on CDs. And the money markets are paying, the APY money markets are 0.50%. These, they're long-term investments with very low returns on interest rates.
Well, you're basically losing money when you're investing in them, because your money can't keep up with the market and inflation and things like that. So when you're getting returns like that, you're literally giving your money to somebody else to invest, and you're losing it at the end of the day.
Well, you're definitely losing, because right now inflation rates are 7%. So by investing these alternative investments, you're already losing.
For sure.
And that's why we're here today to present this phenomenal fund.
Yeah, I mean, the big thing is like, if you're like my mom and dad were, I'm going to put money in the bank. Like they had I don't know about you guys, how many people remember those passbook bank accounts? Like I remember you put a deposit and you got a little passbook savings account. And, my dad didn't know any better. I mean, that's what he put it in, a money market. Oh, we have some money, it's safe, I'll put it in a CD. So that's some of the things that, not having that education, it's not his fault. Like that's how they were growing up and, working at the same job and put all your money in the 401k and hopefully you get that fat pension, which they did not. So it's been kind of a struggle when it comes to that. So I just think it's a different way out there. I'm not saying these are bad vehicles. It's just that you have to know what else is out there and what's your risk level. Like how much does it hurt, when you're going through these things?
Yeah, I would definitely say that it depends on, not only just your risk level, but what's your intention, and where are you starting? If you're 20, you can play around in crypto. Crypto's, when it's good, it's good. When it's bad, it's bad. For a long-term investment, that's it's a decent place to put some of your money. You definitely don't want to put all your money in one basket either, right? So it's where, we invest in real estate. That's some of the things that we do regularly, and we see great returns in that. But do we want all of our money there? Right. So how can we create reserves in our own life and diversify in our own portfolios? And I think that that's something when we're talking about alternative investments, like the pros and cons, if you've got money invested in crypto and all of a sudden it swings, how are you getting your money out if you have a life event? Right. Or if you've got money sitting in real estate or in a syndication, that's 5 years before you can get your money out. If you have a life event, how do you get it out? So it's really important to look to see what are your goals and whether that asset class fits what you're up to.
And that's why we're called Diversify. We're here to diversify and help you leverage your money. Because right now, if your money's sitting in the bank doing nothing, you're losing 7% on inflation. So we're here to help.
Yeah. So let's kind of talk about, some of the common issues investors have, right? So inflation. So I'm going to put in the chat, right? I'm not going to assume what everyone knows what inflation is. Maybe you're feeling inflation, right? If you're buying bacon, I went to the store with my wife and we were trying to get bacon and I was like, holy crap, I don't want the whole pig. Like, I was like, are you kidding me? Guys, put in the chat what you guys think inflation means or what's it doing for you in general, right? So how do you feel about it, right? I read the news actually yesterday, this morning. Inflation has gone up. Almost, it's the highest it's been in 40 years. Inflation. So the numbers and what that really is cost of goods. So what, like food, electric, everything's going up, right? So and I won't be political on this, so I'm laughing. I see some stuff private chats of, well, why it's happening, so I won't say anything. I'll keep that out. I keep religion out, and we could even keep sports out right now.
No, we're not going there. We're going to keep it simple. Don't go there.
So that's number one, right? We talked about if you are in some of these different other vehicles, you're actually losing money. So it's buying power of your dollar. So what you bought, 5 years ago, or the amount of dollars you have, X amount, like let's say a cup of coffee, maybe 5 years ago was $1.50. And now that same cup of coffee might be like $2 and change.
Unless you buy at Starbucks.
Yeah, that's true. I forgot that. You rich people are Starbucks people. Like I'm the working man's coffee guy, the D&D guy, Dunkin' Donuts guys. So that's one of the things you're always kind of worried about is inflation. How do you hedge against it? Right, is number one. So you need to make more than the inflation amount. The other thing that's a killer, oh God, can I tell you is, and I know if there's any financial planners on here, don't kill me by any means, it's those fees on investments. So a lot of people don't realize that how, with compounding interest, we love it, except if you have a ton of fees, right? And what we're talking about is, it might be a mutual fund, it might be a load fee. It could be your financial planner. And I promise you, unless you have a certain X amount of, I'd say at least 10 million or more, your financial planner is not looking at your account every day, making moves for you. and you're paying anywhere from, if you're lucky, 1 to 3% on your total portfolio. And guess what? It doesn't matter if your portfolio goes up or down, you're still paying. So you want to make sure that's going to eat up a lot of your profit. So you might make money on the front end of it, the top end of it. On the bottom end, you're sifting away money. What about not being liquid? Like that drives me nuts. So, again, I own properties, real estate, or you could be in, as I said, in some of these longer term, vehicle syndication. What happens if you need the money tomorrow or within 30 days or 60 days or back when, I'm an old timer. Some of you guys know, I was part of that crash of 2006, 7, 8. And yeah, I had all this equity and also the market dropped and now I'm not liquid. And now you're going to talk about, T-bills and bonds, and they're safe, right? But they're just giving you low returns. And then the other end of it is, not being able to find deals in the market, in real estate. So if you're working full-time, where are you going to find those deals? And I know we've done a lot of webinars, how to show you those off-market deals. So one of the things, like being, fully transparent and, what I have my money in. So let's kind of talk about it, right? So I own a 5-unit building. I own another investment property, is 2 of the things that I own. Obviously, I have money in our fund. I have money in the stock market. I have Roth money, like self-directed in the stock market and on lending. So I definitely have a piece of almost everything except crypto. So the only thing is crypto for me, like I'm all for it. I just don't know enough. And I can't stomach the up and down on it. It's just like, if you're like me, I'm like every morning, every hour, I'd be like, oh, am I up? Am I down? I might, put some money into it, like a small portion, maybe 5% of my portfolio, but I call it like gambling money kind of stuff, because there's no way for me to figure that out is the issue that I have.
Yeah, I'm with you there with crypto and stuff like that. And a lot of times the stock market, I know a lot of people, they'll just invest in stocks, but they actually haven't looked at anything that the company's doing or the profit and loss statements. They don't dive into it. So in my opinion, it's nothing better than gambling when you're investing in something like that and you really are taking somebody else's word for it, like, oh, this is the next hot stock or the next hot crypto, and you haven't done your due diligence. And then I loved what you said about the need to learn the real estate market and make an investment. How many people do we know right now that are buying buy and holds in South Florida, hoping for appreciation, but their returns are in like the 3 and 4% cap rates right now? The longer they hold it and the tax advantages, sure, but you're going to have to deal with property management's tax, the toilets, the tenants. If we have anything similar to what happened with COVID and all of a sudden your tenants don't have to pay, now you're having to foot that bill as well. So there is upside to it, but it's a lot riskier than some other strategies. And if you haven't learned it and it's not something that you do all day long, then it makes it that much more challenging to find the right deal that you can capitalize on these returns.
Yeah. And so the funny part is, like, even like for myself, like I made the mistake in 2006. I was all in real estate and the debt service wasn't covered. So I went from $3 million. You guys have probably, if you've been on the webinars, heard this story. I had 28 properties, $3 million, successful mortgage company, to losing everything. So if I would have been in different speeds too, right? Like obviously we still wholesale, rehab, I'm in different markets. The key is, having different strategies versus throwing it all in on one. So I'm actually kind of curious what you guys are investing in right now. So I threw a poll up here because I'm kind of, and you might be investing in more than one. So let's see what you guys are in. So let's see. Okay. A little bit of everything.
I see a lot of.
And don't worry if you're new, trust me, we've all been new. So thanks for your honesty on that portion, right? And then go ahead and put in the chat which one out of, if you're investing in multiple components, which one is the best return right now? If you had to say, which one are you doing the best on? So I'm kind of curious to see which one, and and I wonder how long too, right? Like if you just got on the stock market the last year since COVID happened, that's a different conversation. Like you're riding it a little bit. So we got some, I see most of you guys are in real estate. Of course, some of you guys are in stocks. Okay, 25% of you guys are in crypto. Okay. And some of you guys are in mutual funds. So here's the second, go ahead and put in the chat, is what's the highest return you've gotten so far? Or if you know what your average is return. I know that's I'm a nerdy person, so I know all my numbers. I know some of you guys are probably like, oh yeah, I've just left it there and oh, now I got this. So, okay. I got
It's like a big percentage in real estate.
Yeah, 14%. Okay. Someone's getting 14%, which is great. Oh, and I won't say your name, but I know that -19, you must have invested what I did. I'm like even now, meaning like some of the things I invested in was like pure speculation. Like of course I got some blue chip, some Apple and Microsoft and all that good stuff that's doing well. But I was like, yeah, I'm gonna figure out the stock market quick on my part-time and read all these things. And I don't know, I call it gambling money. Like I don't go to the casino, I do online gambling, meaning the stock market. Okay. Dion, that's awesome. Some land development. Okay.
And Dion
Awesome.
also mentioned that he's just come over from New Jersey, and it's not New Jersey, from New Zealand. New Jersey is almost like another country. And he was saying that inflation is the least of his concerns, that he's battling with the exchange rate coming over. So that's very interesting.
Yeah, that makes a big difference. I mean, we have like in our network, we have people that are flipping land, doing development, which are great active income strategies, right? So like one of the things that drives me nuts, I don't know about you guys, is like I don't want to work forever, right? So we talk about making retirement simple again, and it's great. Like when I'm seeing these things like wholesaling and rehabbing, I do it. Dion's talking about land development, but that's active income. And what I'm really trying to do, I obviously these last couple of years, I've had some of the best years of my life, is I'm trying to get that passive, where it doesn't matter what I do. Like I wake up, I made some money. So right now, unfortunately, I'm still a little bit in the rat race, trying to acquire. I actually do like it, so it's not a big deal. I don't know if I want to do it forever, or maybe I might just want to do it for fun. So I mean, how many of you guys have a good amount of passive income coming up? Go ahead and put in the chat if you're happy with your passive income right now, because it's going to give me a good idea of where you guys are at. And don't make me feel like the only person that's not, happy with their passive income. If everyone says, oh, I already make more than enough, I don't have to do anything, that'll be a whole different conversation. Rogelia, oh yeah, not happy yet. Okay. Daniel, all right, definitely not enough, need more. Okay, some honest people.
I think we can always need more. We all
Yes.
never get enough.
Yeah, I mean, I know Jason's wife also. She's pretty easygoing. He knows my wife. She would definitely push for more passive income.
Slave driver.
And I know it's for Taryn. I mean, with 3 girls, 2 of them teenagers, the passive income would definitely help out with all their sports and all the time that you actually have, right? So I think that's always very important on what you're doing.
For sure.
So I do. So let's talk about some of the benefits of the fund, right? We do have low risk. It is a fund, so there is risk, right? So I do want to let everyone know there is always a risk in any fund. If anyone guarantees you money, I'm not even going to say what they violate. First of all, there's no guarantee, right? So let's talk about that. We do have fixed rates. So Taryn, you want to talk about how our debt fund, or how the fund actually works and how we're available?
Sure. Yeah. So the fund is different because it is a debt share fund. And what that basically means is that it allows us to give you a fixed rate of return depending on how much money you're investing in the fund, right? So anything from 25,000 to 249,000, we give you 6%. Anything over 250,000, we give you 8%. And then over $1 million, we give you 10%. And it's regardless of what's happening in the fund. The cool thing is that we're going to talk about it in number 6 about collateralized by real estate, is it's backed on $100 million portfolio. So it's not based on one acquisition. It's not based on a pro forma. We have cash flow happening in the fund, and that's why we can offer the fixed rate return. So, you know, if you've got, for instance, a lot of our investors have money sitting in self-directed IRAs, and, you know, normally they'll do hard money lending or things like that. Well, the problem is that they can't get that velocity of money. You know, they get it back and then they sit on it for 3-4 months, which really eats into their returns. By sending it into the fund, they start getting that fixed rate day one, the minute it goes in, and they don't have to think about it. They get paid twice a year, and that money goes straight. They can either have it go right back into the fund. If a lot of our self-directed IRA that are using retirement money prefer to reinvest it, or it just goes right back into their account for them to use. So it's a really nice way to know exactly what you're getting. You're not guessing, you know, like, oh, is this deal going to work out or not? We're you know, not guaranteeing, again, because every investment is risky, but we do have that fixed rate.
And
Yeah,
this
we're
fund
loving the
also,
risk.
this fund has survived the pandemic, never had a problem with cash flow, survived hurricanes. The track record has been phenomenal. I mean, it's just been a really strong fund and survived everything, you know, so so the risk is very, very low, and it's just a solid fund.
Yeah, and so like Taryn, that was a really good point. So one of our investors, David, that's exactly what he does. Was he was lending out money for deals, and he was doing good. Like, I mean, it's the Midwest, you know, his daughter, who I'm very good friends with, is, I almost call her a loan shark. She'll get like, you know, 2 or 3 points and 12% and crazy numbers like that. And the issue that we was having was exactly what you said. He would lend it out for 90 days, 120 days, and then it would sit there for 5 months.
Yep.
And he's always looking for another deal. And then he was lending money on an area he doesn't know, right? He thinks the loan to value end of it, and he was just getting tired of it. And so what we figured out was, you know, if you put this amount of money, how much money are you getting without the drama, is what I call it, where you kind of just wake up and, you know, hey, you're going to get that money. The other big thing is, you know, we do have liquidity. So Jason, you know, how important is it to be liquid? I mean, I know you're doing all the high-end stuff and, you know, businesses, and as a businessman and the high-end people that you deal with, why is liquidity so important to most investors?
Oh, because they're getting ready for their next investment. They want that money tangible, and also to have the money, you know, within 12 months we're offering liquidity and having it tangible to decide where you want to go from there is very important. You don't want your money locked up in a syndication, you know, and keep it up for 5 years, or even crowdfunding. Crowdfunding does like 3 years as well. So, you know, most investors, especially in the real estate business, you need your money tangible. So liquidity is very important.
Yeah. How many of you guys, I got to put in the chat that, man, I found this great deal if I only had the money, or if I was only liquid, right? So I know a lot of you guys own real estate, just like I do. You can't get a line of credit because, you know, it's an investment property. If you have a good accountant that's aggressive like mine, you know, I kind of joke about it. If you looked at my tax returns, I'd probably, you know, I'd be lucky to be able to finance a bicycle, meaning, you know, I deduct, you know, I use a lot of great tax advantage strategies. So not being liquid is a big difference. I know, and Jason talked about it too, was, you know, we're talking about syndication. So I'm actually in a syndication. I forgot to tell you about that. I am so far 3.5 years into it. And guess what? They needed a capital raise, which means I got a call and saying, hey, I know you put this amount of money in. Something kind of happened. The pro forma, I know it's going to say this, but this is what happened out of our control. Can you know, put another $50,000 in? You do not want that phone call, let me tell you. So, you know, it's for 10 years. I'm hoping that now I get my money back. It should work out, but, you know, I don't know. I mean, what they told me was, you know, all based on pro forma. So when you're looking at syndications, they don't know what it's going to be. They're saying if everything works out, we're going to get this. And in general, I would say you got to budget at least 5 years on a syndication on that portion. And then you really have no control. Like, they're not going to call you up and say, hey, Jason, do you think we should, you know, change the roof? Like, you have no say in anything. If you want to get your money out, it's not happening. And you can't leverage that money also. One of the things that we also do that's different is our investment. Really, we're asking for a minimum 12 months. That's it. So maybe you just want to park your money until your next investment, or you got a big windfall on some real estate that you sold and you just don't know what you want to put your money in. And you're saying, well, now it's sitting in my bank account earning 1% or 0.5%. What am I going to do it? And one of the things that I found with, especially with investors, is a lot of times you make bad decisions because your money's just sitting there. I don't know how many people you guys know, Jason, Taryn, where you just feel like, oh my God, I have this money sitting here. What am I going to do with it? It like drives you nuts. For the people that are new to investing, I know it sounds like a ridiculous thing, but as you start building your investment career, like I wish that was a good problem. Ask around. You'll talk to high net worth people, and it drives them insane. They do not have money sitting there doing nothing on that portion, right? Like it's just
for sure. I mean, if you look at massive hedge funds that have $50 billion, like that's their biggest problem is deploying that capital in something that's going to make a return and return of investment, right? Like, so for most investors, our first concern is returning of our investment, and then it's the return on our investment. So it becomes, as you start to have money sitting there, it's like, where do you put it? And, there's an opportunity cost, because if you put it in, like you're talking about, into a syndication that's going to stay for 5 years, well, now there could be an opportunity cost, because now you don't have that money liquid to take advantage of an even better deal down the road. And it's one of the things that I like about the structure of our fund, that we're able to offer that. When we were talking about how we were going to structure our fund, a couple of the things that we were looking at is like, all right, well, if we do syndications, well, we raise money, right? But by the time we go find the asset, the person probably has already deployed their capital. And then the other side of it, if we already have the asset acquired, then we're scrambling to try to find the capital. So by doing it this way and being able to raise into an existing fund where you're getting your fixed rate, your liquidity, no fees, it allows us to be able to go and find acquisitions that really make sense, so that we're not trying to, rush into a deal that doesn't make sense. And it makes it a better opportunity for everyone.
Taryn, did you just say no fees?
I said no fees. That's right. I said none.
Just want to touch something. If you guys going to sell, if you have investment properties and you're looking to sell and you need to do a 1031 exchange, we have a process to do something similar to that. I won't go into it right now. Maybe we'll discuss it later in a phone call conversation. But we do have the means to get you into the fund before you get into the 1031 exchange, which is very big for investors who got to keep moving their investment properties. So that's something we can talk about down the road.
Yeah. So one of the things is, like, to give you an idea about the no fees, right? Like, people are like, when I tell people, Jason, they're like, you have no fees. Like, what the heck, right? That's not possible.
Yeah, people don't believe it.
For us, yeah, they don't believe it. So the reason, as Sharif, who we work with very closely, and we'll talk about, our partners on the funds, is that he told me something that was really important that day. He goes, Anish, do you want to trip over dollars to pick up pennies? Right? Like, what are you going to make? So the industry average, with funds is, they're going to charge the fund 2% is a minimum of whatever you raise as an automatic fee. The great thing is, since we combined with Sharif working with him, he's got the back end covered. So for us, we're probably, I don't know any other people or any other funds that have no fees. We're not interested in fees. Like, we want to acquire properties, do value add on and make it a win-win. So that's something that is very different from most other companies out there. What? Actually, we're talking about safety of investment. So I'm going to put up a poll, and I'm just kind of curious, what's the most important thing for you when you're looking at an investment?
And while you guys are doing that, I'll also talk about, when during COVID, as COVID was happening and a lot of people didn't know what was what they were doing, people were starting to ask for their money back because they wanted to make sure that they were liquid in different funds. And I was reading through one of the forums of a couple very big name funds, and the investors were mad because they were getting hit with prepayment penalties. They were getting hit with other fees. They were getting told that they couldn't take their money out at that time. right? And, Sharif and our fund was completely different. It was like, okay, we understand that you've got things going on, and we were making sure we could get our money out for our investors if they needed it. And, the thought pattern that we have at, with a diversified passive income is that at the end of the day, if we can help you get your money back when you need it, the minute you don't need it, you're going to invest back with us, and so it becomes a family. At the end of the day, we understand that you guys have got needs. And I just love the fact that we have no fees and we don't charge prepayment penalties and things like that. And we want to work with you.
Yeah. And the other big thing is that, is with our fund, the day you put it in is the day you start earning interest. You wire the money tomorrow, you start earning interest right away. And the last big point on some of the benefits, it's collateralized by real estate. So Jason, like, how important is that to you, that if you're investing in something and it's collateralized by something?
Oh, absolutely. You have, you want to have a safety net. You want to feel confident in your investment. And when you have it cross-collateralized by $100 million portfolio, I mean, that gives you a peace of mind to know that, I'm going to get fixed returns, and you hold the note, you're feeling really good on the investments. You get a good confidence.
Yeah, as I said, like for me, I like, the problem with like typical stock. I mean, I know Apple's doing well, so like, what are you going to buy, more iPhones to raise the stock? Like the lack of control drives me nuts. So some of you guys have been watching our webinars. I try to mitigate as much risk as possible when it comes to real estate, buying properties, wholesaling deals, rehabbing. I'm super conservative on a lot of things, especially when it comes to my money. But I do have some things I'm like, well, I don't mind trying it out, with some risk level. And then I'm always bitter when it doesn't work out. So I don't know. Maybe I'm, maybe I'm right now, I kind of need to work on that too. So.
Well, I mean, one of the best part about, collateralizing against an asset, a portfolio, is that you're not worried about one project if it doesn't meet your numbers, because you have all of the other ones in the portfolio that is keeping it sound. When you're talking about syndications and things like that, you really, and this is great segue into the section, right? When you're talking about syndications, you're investing on what you think the investor is saying is true. So you have to have trust that the investor knows what they're talking about, that their pro forma is actually on track, and that your investment's going to be secure against that, right? Where with a cross collateralized, and that's a big word for me, against an entire portfolio, it allows for, us to be able to diversify in a certain asset class, but your money still to be safer and secure than if it was in a syndication, right? Because we have so many more assets going on.
Yeah, I mean, it's just a big difference. Also, the other issue that I run into, and I'll be honest, and I'll admit what happened to some of the things that I've invested in, things that were, I don't know, I'm going to say that they told me it was one thing and it wasn't, on trust issues. And, and like I invested in a marijuana company when it first started. And, oh, we're going to do this when the marijuana stocks, and they're going to do this, and it became legal and this. And before I knew it, it was nothing what they said. And that was some of the challenge. And I know there's great marketers out there, is an understatement. And, now I just want to make sure, and a lot of you guys know who we are, or especially me and Taryn, and now, Jason too, because you've been watching us for a while, where I live. Some of you guys, I'm on Las Olas, if you guys need to come meet me and get your money. No, I'm kidding. But like, it's just one of those things that it's important on who you're investing with. I see a lot of you guys, almost half of you guys are looking for consistent returns. Why is that? Like, what gives you, is it the peace of mind? Is it not thinking about it? What is the, what's so important about consistent returns for you guys? Because that is important for me too. I'm always kind of curious.
I think it's important for all investors. Consistent returns is the name of the game, and that's what you're getting here, and that's why this fund is so attractive. It has all the fundamentals that we're talking about. You got 12 months of liquidity, you got fixed returns, very low risk, backed by real estate. Like I said, I'm very excited to be part of this, and I think it's a great fund to invest in.
Yep. So I see a lot of guys, liquidity, peace of mind. Yeah, same thing. I mean, I like not thinking about it. So, one of the things is we actually pay, twice a year. So guess what? Payment time's coming up at the end of February. Woo, guess who's happy? End of February and end of August. So we pay twice a year, and it's going to be nice. Like when I got, that return, I was like, yes. So we've invested, over $500,000 of our own money into the fund, right? I'm one of those people, practice what you preach. Don't be asking other people to invest if you don't have your own money in it. So I'm a big believer on that portion. I am using different vehicles. So I am leveraging, money. So I'm using my Roth IRA, self-directed, to make some tax-free money. I've also used some advanced strategies because some of you guys know I'm a number nerd. I refinanced some of my investment properties and cashed out them, and I'm using arbitrage on the spread to make money. I'm also using my life insurance with overfunding, making money. So I'm using just some of the basic moves I've made. In the last year, I made about 22% more without actually making any extra money.
That's
so
big.
There's a lot of different strategies out there.
That's
so,
big. That's a big number, 22%.
Yeah, when you start to learn that it's all about how you move your money, and you don't have to actually make any more or spend any less. You just move your money through different pathways, through different vaults, like the whole life. You've got a whole life policy, or is it variable life? Whole life policy where you're overfunding it. You're able to take a loan against it at 95%, and you put it in the fund and you get to make the difference, right? And then at any time, if you need to bring it back out, you got liquidity, and you can pay off that loan if you need to. It's a great way to leverage things that you've already got in place. I'm trying to get my dad right now. His properties increased about $150,000. So I'm trying to convince him to, take that HELOC and put that in the fund, because then he can make the arbitrage between the HELOC and what he would make in the fund. And it's, an extra couple thousand, well, not couple thousand, it's a little bit more than that, right? But it's definitely worth it.
Yeah, I mean, it's like, again, I know some of you guys, right? Like you want to own your place free and clear. I get it, right? Or you want to own all these doors free and clear and it's cash flow. What we talked about a little bit earlier, and I'm trying not to make this an economics class by any means, is like now you're battling inflation, right? So yeah, you bought the house, for 100,000, 8 years ago, and now you sold for 300,000, 8 years later. Did you really make 200,000? Not really, right? You got, repairs you're not adding in. You might have closing costs. And what is the buying power? So if you start doing cash on cash, internal rate of return, you're going to start realizing that, I probably almost broke even. So I think that's why, like for me, I like using other people's money. It's the best hedge against inflation. How do you think these banks, right? Like I always joke about it, right? The banks aren't making any money. You go to any major city, right? Downtown, who's got the tall buildings on there? It's your banks, right? Didn't matter when the market crashed in 2000. Oh, the banks are losing all this money. No, they're not, right? They're using your money, and they're passing on the inflation. So we'll use like what Jason was talking about. The money market's what, 0.5%, and then they're lending it out at X amount at 3.5%, not including the money from the Federal Reserve that they could borrow. So that's what even Taryn was talking about, velocity of money. And that's what, like, I want to be that person. I want to use the same techniques what they're doing, and it really makes a big difference on your investment portfolio.
When I was learning about investing, as a kid, I would listen to Robert Kiyosaki on all these tycoons and investing. And one of the things he pointed out was, don't pay off your property. And I was shocked. Like, what do you mean don't pay off your home? He says, use the equity, use the money, use the liquidity, use the money to invest into more properties. So I know a lot of wealthy investors that are actually renting, and they use their cash on cash to make more money. So,
Jason, are you talking about me? The irony is he knows I rent in a high rise, so where I love to live, where I live, but I have all my money in investments. So.
You're not the only wealthy investor that I know of. So I know others too. So at the end of the day, you want to keep that money working for you. That's the whole idea of investing. The money's got to be working for you. You don't want to be the slave to the money. So if you're putting your money all in one basket, like your house, I just paid off my house. I've heard a lot of people say that, and they're jumping up for joy. And like, why would you do that? You leverage the money to diversify your portfolio to make more money. And that's the key concepts of making it work.
Absolutely. So now you guys are probably wondering, we talked about the fund of funds a little bit. So how are we able to pay interest from day one? You must be wondering, like, hey, they don't have any assets yet. So with us, we, working with Sharif and the SFI fund and NICSIF, we actually could invest. When you invest with us, or even the money I put in it, he actually leverages it against his portfolio. So that's how we're able to pay interest from day one. We're in multiple markets, right? What does the fund have? And Taryn was talking about in Puerto Rico. He is the largest landowner in Old San Juan. So he's got over, including his fund and his personal also, he owns about 31 buildings, commercial buildings in Old San Juan. He has about 14 in the actual SFI fund. And, you want to talk about what kind of, we've all been there in Puerto Rico and Old San Juan. How many of you guys have actually been to Old San Juan? Got to put in the chat while we talk about what kind of properties are in the fund. So, go ahead, Jason, what was your favorite property that you liked? Do you remember?
In San Juan? There were so many, but I can't even remember. There's just too many to remember which one I liked the best. But I think I like the ones closer to the cruise ships, where he has its corporate tenants down below.
Like Diamonds International. He's got Coach down there.
Yeah, that's why I was laughing. That's what I was getting to, because between your wife and my wife, not Taryn so much, was like, hey, I really love this building. I said, why? She's like, oh, the Coach store. And then Diamond International. Yeah. I'm like, he does not own the businesses. She tried to work with me. Can we get a discount because we're part of the fund at the store? I'm like, no.
The reason why that's important, those corporate tenants, they guarantee the lease. That's a guaranteed cash flow.
Yeah.
Guaranteed in the lease. It's phenomenal. When you have a corporate net, triple net tenants, phenomenal cash flow. That's why the fund is so strong.
Yeah. So during COVID, right? The cruise ships stopped going. And this is why I know we didn't miss a payment. Cruise ships stopped coming. There was next to nobody in Old San Juan, but those corporate tenants were still paying their leases. And so we didn't have to worry about what was happening. It's so powerful to have those triple net leases with corporate guarantees.
That's just
right now,
a successful.
Yeah, and right now that I just spoke to Sharif the other day, and he was just telling me that he's 100% occupied. Like people are waiting, and I don't know if you guys know what's happening in Puerto Rico and all the crypto millionaires and the tax incentives. They're all moving down to Puerto Rico, and they're trying to buy buildings.
Yeah,
and or start a business. And I mean, that's a whole nother conversation of like the tax incentives of what's happening. But really, that's the important thing on cash flow. He's, making 18 to 25%, and it's triple net leases. Oh, and by the way, if you're actually, because it's a historic district and you're renovating or you're building a hotel, you're getting a 40% tax break incentive.
Yep.
Amazing.
So can you imagine, so the cash flow is phenomenal. And that's how we're able to actually pay from day one. That's step number one. Number two is we're also in San Francisco, right? The fund actually flips high-end homes in San Francisco. And, right now I know the portfolio has 6 houses in there worth about 35 million. And he does value add, right? So I thought it was pretty funny because as investors, especially, we're always looking for a discount. How am I gonna get this other discount? Buying a foreclosure, what am I gonna? He doesn't actually mind paying market price because he builds up, or he repurposes the basements into a true living space, from storage to living space. And it's pretty phenomenal. Like he'll pay market price for like 3 million or so, or 2.5, 3 million. He'll add 1,500 square feet. And his cost is $300 a square foot to make these high-end homes and convert it. And on the exit strategy, it's almost 1,500 a square foot. So he's in these projects usually on average 1 year to 2 years, building with architectural. So we always have money coming in to the fund on these big, cash flow properties when they sell. So I think it's pretty interesting and people always ask them like, hey, why don't you do it in South Florida? One of the things Silicon Valley has, true business people or companies, I should say, with high-end executives that the kids go to school at these places versus, again, I love South Florida. I live here, obviously. It's not your second or third or fourth home, right? These executives actually need something. So I think that's important too.
Yeah. And I love what you say. Like, one of the questions I get asked a lot is like, well, how is it possible for us to offer that liquidity, right? Because we are investing in assets. So if the money's placed, how can we say, well, we can get it back out? And that's the reason, because we have these holds, in Puerto Rico and things like that, but we also have these luxury flips that we do in San Francisco, which gives us the influx of cash in between deals. So that's one of the reasons why we can offer such liquidity, because we use that velocity of money in our own fund.
Yeah, it makes a big difference. Having different asset classes. We're looking to add more asset classes with the fund. The next question is,
you just did a transaction recently. You just $1.5 million you made within 1 year?
So it's 2 years. Yeah,
2
so in
years.
San Francisco, he bought a house for $2.5 million, and he actually put $1 million into it. And he just sold for 5.7 in 1 day, right? Like, I know the market, we think the market's crazy here. It's the same thing in San Francisco. So the numbers are, everything that you're seeing, it's all over. And again, like what he was telling me too, if you actually look up San Francisco, even when the market was really bad in 2006 or 7, they took the least amount of losses. So historical data shows that area has done the best, in the country when it comes to, high-end homes, usually, and I'm using the range from 3 million to 12 million. I'm not talking lower end homes. Don't beat me up. Don't try to tell me about Michigan and Ohio. I got you. I'm talking about an asset class between 3 million to 12 million. The other thing is, right, so yes, we give you fixed returns. So what is the end product, right? So let's talk about what we really want to do too, right? We're giving you fixed returns. But our idea is, between the three of us, we've done hundreds of millions of dollars of deals and transactions. We want to actually start buying some of these buildings, multifamily, freestanding commercial buildings. And what the idea of the fund is, hey, listen, you're our investors, you put money in. Now we find a deal. Let's just say it's for easy numbers, 5 million. And we have, 5 million in the fund, or 7 million or 8 million, whatever the number is. And now we're going to go back to our initial investors and say, listen, Taryn, I know I promised you 6%, if you put over 25,000 to 250, 8%, over 250 to $1 million. What do you want to do? Do you want to actually get into a project? And we could either give you an equity position or a higher return or both. So now you're actually partners with that. And we're literally going down the line, about with our investors to see where you want to be, right? You might say, listen, Anish, I got too much other risky stuff. I'm happy with my 8%. I'm good, right? So we'll go ahead and do that for you. Or you might say, man, I see the value add on this project. And here's the one thing though, the caveat is if you do get into a project with us, you're going to lose a little bit of liquidity. What we are going to tell our investors, it's going to be a 3 or 4 year plan, but you'll know that up front, and it's project by project. So you'll have the balance to figure out, or you might want to do half. You might want to do, part of it. So like, I know Ron's actually asking a great question, right? If the minimum investment is 25,000 with a 6% return, and we're talking about inflation is at 7%, does the fund adjust for inflation? It does not, but as we move into, it gets you in to park your money, we find a project, you could be in the project which should outperform inflation. So real estate is a good hedge against inflation. So you do have the opportunity to kind of beat it versus, the question is, what are you going to do otherwise, right? If you don't put it in, what's it doing? Where are you going to put your money, right? Or what, a lot of you guys talk about, I need consistent returns. A lot of you guys, and again, it actually goes a little higher because it compounds. if you start reinvesting. So I think that's something important when it comes to, you know, asset types or what you're going to do against inflation too. So.
Yeah, and I think you hit it on the money there, Nish. Regarding the, you know, you're looking at alternatives, you find that stock market is attractive, but it's very volatile. You need to diversify your funds. You can't be all hands in the stock market. It's just not safe. It doesn't make any sense. You know, you're building relationships up with us and the team, the portfolio, Sharif, you're building long-term relationships of acquiring upsides on real estate, which is huge.
Yeah,
Yeah,
I mean,
so-
it's.
So
yeah, go ahead,
Nancy
I'm sorry.
asked, like, what are the upsides beyond 6%? So you kind of touched on it, but I'll reiterate it, right? So Nancy, at the end of the day, you're going to be in the fund at 6%, right? We're a fund of funds. So as we acquire new properties, it depends on how we're structuring that deal, right? Like if it's going to be, for instance, randomly, like let's say we were going to get an Airbnb or an assisted living facility, we would structure it a little bit differently than if we were doing a multifamily. And so we don't know what it would be, but it could be, we would offer an equity position or 2% accrued or things like this. And we would come to you and say, hey, listen, this is the asset that we're looking to pick up. This is how we're structuring the deal. And this is what we're offering you as an incentive to take on this project with us, because we do understand that a one-on-one project is slightly riskier than what the fund is already at. So we're going to make sure you're compensated for taking on that risk with us. Right. And then if you're not, if like Anish was saying, like if it's not something you're comfortable with, maybe you're, 5 years from retiring and you just like the consistent returns, then you'll stay in the first fund without coming over. Does that make more sense, Nancy?
Yeah,
Just
put
throw it up in
chat.
the chat
So-
if you still have questions.
Yeah, I didn't see that. So look, one of the other things is that, what we found, including myself, most of our investors are using their retirement funds, right? And it's literally, I don't know how many of you guys, whether it's in our fund or real estate or whatever you're doing, all the financial planners, I have a couple of friends that are financial planners. I hope they're not on this call. They're gonna be so mad at me. Like, meaning they're good. Like, do you know what your financial planner is charging you? Or do you know what your fees are? Like, take out a statement, look at your 401k, your retirement, and see what your fees are. You will be very surprised how much is going to fees. I've seen numbers as high as 3%. I've seen some people negotiate on the 1%, which is good. So I think it's always important what you're actually doing of comparing apples to apples. So it gives you, and the other question that I just got also was, can you combine it from different accounts to get to the 250? And the answer is yes. So you could put, hey, I have 100,000 in my money market. I want to use 150 from my self-directed to get to the to get to the 8%. So those are always options that you're going to have to combine money to get you to the next level. As I said, one of the things is, we do ask, right? We're asking for a 12-month minimum. If you do need your money back, we're generally asking, we do need it in writing. We are asking a 6-month notice. Have we done it for 90 days? Absolutely. Terrence talked about it, is if we don't deploy your money, we'd rather give it back to you. Like I heard you talk about that earlier, and I think that makes a big difference, because for us, then it becomes a cost. We're looking, even with the funds, for both funds, adding more, asset classes and generating income. The good thing that between the three of us is, you heard Jason, he's, assisted living facilities. He's bought and sold businesses with high net worth clients. My background, I've been pretty much a little taste of everything, I should say. Whether it's rehabbing, wholesaling, notes, and, obviously Terrence done some alternative stuff that actually we're going to do a workshop next week about some creative financing subject to creating notes or seller financing. So we have a lot of different experience between the three of us. Also, because of our reach, with AREA, we're not only looking in South Florida, and that's also with Sharif, because we could do high-end asset classes throughout the country. So we're not only limited because we do have a team of professionals that know how to get these high-end corporate guaranteed tenants. And I think that makes a big difference. That separates us from most companies out there. So I think it's just one of the unique spots that we have. What the other thing I always tell people, try us out, right? Like, don't put all your money with us. I got it, right? We're telling you, don't put all your eggs in our basket. Try us out, park some money, see how it goes. Like for me, actually, this last year, like some of the beatings I took on the stock market, I kind of got to offset it with the money I have in the fund, with the guaranteed money. So like, I'm like, okay, I can breathe a little bit easier too. So.
Excellent. Excellent.
Do you see any more questions? If you got any more questions in the chat, I mean, put them in the Q&A, because the chat moves way too fast for me to actually check it out. So what we'll also do is, I know you guys are going to have a lot more general questions that are, specific. And, you could actually, give us a call or go to our website. You could do a one-on-one with us and ask me all the tough questions offline. Can I do this? Can I do that? You want to speak to also Sharif. Also, the cool thing is, again, he's going to be our main speaker in March. And we're talking about those commercial deals that we're placing. And guess what? We're placing those because he not only teaches it, it goes right into the fund. So that it goes hand in hand. So if you haven't seen Sharif speak, as I said, he's one of my mentors and partners, probably one of the smartest people I've ever met. We're not we're not the upsell kind of people. Are you going to be rich on our fund? Probably not. I'm not saying like it's not a get rich quick thing that you're going to do an option. And I'm not. I mean, we're not going to be Tesla. I don't know. We're not creating some new, energy or anything like that. But Jason brought it up. It's kind of like Warren Buffett, right? I mean, it's just the constant, consistent end of what you're doing. And all of a sudden you wake up and you're like, oh, I got this, right? So and with compounding interest, what you'll start really realizing, if you start looking at the numbers, if you invest over 10, 20 years, you'll start exploding. I think one of the issues I had, especially when I got into investing, and this happens especially here in South Florida, is like, you want to make fast money, right? So what we're talking about is not glamorous. I got it, right? But it's going to get you where you want to be. Like, why are you doing this, right? We're talking about building passive income versus active. I told you my own personal goal is to move away from so much active income to more passive. I know, like, if you're new to investing, that you're probably saying, well, I'd be happy to make some active income. You're going to start realizing it's even more fun to make money when you're not working, you're not being part of it. It just kind of shows up. And that's pretty important for me.
Yeah, the relationships part of it is huge. Being part of this with us, because we have teams behind us. I mean, finding deals and properties, it takes a lot of work, and knowing how to actually size it up to make sure it's a good deal, that's a lot of work and a lot of experience. So you're joining a team for the long term. So not just based on the fixed returns that you're going to get, but you're joining something to acquire real estate and build your own portfolio with us.
Awesome. Well, are there any other questions that anybody has that would benefit the group? Does anybody see?
Yeah, I do see some questions that are like super specific. So I'm not gonna, they're messaging me directly. I don't want to, as I said, give us a call. I'd gladly answer those questions. As you've been seeing, like this last year or 2 years that we've done, I don't know how many webinars. You're probably seeing how I've probably evolved also. So like we're teaching creative financing, we're teaching, self-directed IRAs. I've had people, talk about their life insurance. I'm using like a master sweep account. It's basically, the key is, I tell everyone in general, right, is it's great that there's information out there. What are you doing with it, right? Like, don't be on the sidelines. You're constantly going to hear this from me, whether it's investing, it's rehabbing, I mean, it's kind of funny because, Taryn and I, and, we're in a mastermind. And one of the big things was it's having a vision, right? Your business vision, and then also your personal vision. So I'm actually kind of working on both. And I thought I had a personal vision, and I realized I don't. So I, invite you, about your personal vision, because it's great to make money. I get it. But, are you going to eat it? You're not going to eat the money, right? Maybe, you might sleep on it if you had a bunch, I guess. Use it. Probably not very comfortable, or probably be dirty, I guess. But, you're using that as a vehicle to live the life you want. And I think that's something that's very important. And that's why I'm in like different pockets. I'm not an expert on, a lot of things, but I have a team, and that's what the whole RIA is, to build or have a team of experts that you trust. And, I've seen my life really kind of explode on, on the personal end of it too, where, I've been able to go on the trips that I want, some of the things that, we've gone to Dubai, the Tulum, Maldives, like, if you would have asked me years ago if I could go on any of those vacations, I would say, yeah, no chance. But now I have that peace of mind because I have different, revenues of income. I have a 5-unit building. I'm using Airbnb. I'm obviously have a massive wholesale business, a rehab business, where we're starting to create notes and creative financing. And now, like, it's funny, like, I kind of joke about it, like, it's all good. Like, what's your favorite? I'm like, yes to all of it. Right. But there's no way I would have the time to become an expert at all of it. And I think that's really, what I invite people is to start really working on your own personal vision of what you're looking for. And
I think any successful person will tell you the thing to do is multiple passive streams of income. That's what you need to build. That is the essence of success. Multiple streams of passive income. Hence, that's why we are called diversified passive income.
Yeah, we were going to call ourselves Why Not Me, but then we decided to get clever.
How many
John,
people would how many people would invest if our fund was called Why Not Me? And that's what we were kind of joking about that, but like we were like, well, maybe they wouldn't get our sense of humor or anything, but
John was asking why we believe that this is better than hard money lending. So
you want to take that in, or you want me to take that?
I mean, I can, but you can go ahead.
Okay, sure. I mean, I do hard money lending, right? Like, we fund the deals for our students. The issue I have with hard money lending, if I was just a full lender as a part-timer, I'm not talking about our vendors that do it full-time using their own money, is you have to know the properties, right? Your risk level. What's your loan to value going to be? And some of the things is like some of these institutional hard lenders, right? Like Lending Home. I don't want to put them all on blast, but I love those guys, by the way. But they're selling it to Wall Street. So they could afford higher loan to values and better interest rates. Like, I wouldn't do it. And I'll give you the perfect example is I'm a premier customer or pro customer with Lending Home. And I get my rates are 8% and 1 point. And I have a few $1 million on a line. Like, how are you going to get more money as an individual, right? The second end of it, you have to be careful of the lender laws. So if you don't do it right, if you're using primary, you're gonna have a problem. The third thing is, what happens if something goes bad, right? No one ever wants to talk about when things go bad. Now you got to foreclose on it. So is it better? I'm not saying it's better or not. I'm looking for less hassle, right? So again, you could maybe you keep X amount of money for hard money because maybe that's your passion. I don't know. Or you could try to deal share on that end of it. But again, that goes into active business versus you're putting it into something that it's more passive. So they're both good. I just think it's two different things.
Yeah. And I would say that a lot of people, when they ask that question, they're chasing the yield, and they forget right now in this market, there is money all over the place. And so it becomes even harder to try to get those, that 2.12%, because you can go pretty much anywhere and get that or better. So there are going to be times when your money's being lent out and you're getting a good rate, but then how much of that year is down where it's sitting in your account because you haven't identified that next person, right? And then, like you were saying, Anish, you have to, like, do you know the borrower? Do you trust that they know what they're doing, right? Did they accurately do the repair costs, or are they going to end up screwing up the deal? Do you know the area? So there's a lot of due diligence that go in on the front end, or there should be, should I say, a lot of due diligence before you lend your money out. You know, don't get caught up in saying, oh, well, I can get 14% on this, and so it's way better than something that's 6%. You've got to look at all the factors that go into it. And then what is your return, you know, over the year? You know, is your money deployed? And that, I think, makes the biggest. I mean, we've got a lot of investors right now in the fund for that particular reason. We had that same conversation and we asked them, hey, go look, go look at last year. How many days was it not being invested? And then go and check what your actual return on that money was, minus all your fees and things like that. And they realized that it wasn't any better than what they could get in the fund with less.
I mean, one of the things is, like, one of our investors, that's why he did put money in the fund, is that he actually lent out money, and I believe it's in Kentucky. And right now, 2 years of no payments. So, and the guy is the investor, oh, I'm going to refinance you out. So now guess what? He's hiring an attorney. Luckily, his loan to value is good. So the property, you know, obviously went up in price. So he's covered, but the hassle is driving him nuts. He's like, oh, this friggin' guy, like, I hope he doesn't burn down the house, and, you know, all these other things. So like, it really comes out to, you know, what's your, you know, what level do you want to be active versus passive? So like, for me, it's easy because I'm in real estate. I know a lot of you guys are working full time and you're not in real estate and you don't know where, you know, what, but you want to be in real estate. This is a way you can get into real estate without being actively in real estate. I know everyone wants to say, oh, I'm part of this, you know, fund, absolutely, or I'm part of this project. And, you know, it really changes your perspective too, so.
Excellent. I think we did.
So if there's only a couple, I don't know if there's any last questions. So right on the slide, you could see, you could go to our website. You could actually call our office. You could set up a meeting with us, and I know you might have more specific questions. We could even show you some of our portfolio, what we're doing. You know, it's pretty easy. There's no, I don't know, you guys know me for a while. Hopefully you've been watching a lot of webinars. I'm not high pressure. Like, you're not calling a car dealership saying, oh, you have to do this. Everyone's doing it. I'm not that guy. So we always want to make sure it's a good fit. Ask me the tough questions, right? You know, obviously we've been SEC approved. You know, for us, you know, you can look it up. You could see who we are. You could see, you know, Sharif's fund's been up and running since 2009. You know, those are some good things or points. We just want to make sure you feel comfortable, you know, investing with us too. So,
Hey, Nish, do you want to talk about the non-credited, just to bring it up real quick, of how they get processed? Or
yeah, so this is really probably, and I know we talked about what an accredited investor versus non-accredited. So we do have two funds, our sister funds, you know, SFI and MIGSIP. So we do have an option for non-accredited. So if you were in the webinar early, an accredited investor, you have to make at least 200,000 as a single person, or 300,000 as a married couple, or $1 million in assets. There's different ways that you could actually still invest in the fund. So that's pretty much more of an offline question, but there's a way that you can. There's a little holding period of 30 days that Sharif has to talk to you and get to know you. Really, that's the way I would say it. I'm not sure
if you have any questions, put it in the Q&A. I see a couple of hand raised. Just if you can drop the question in the Q&A, we can answer it quickly for you.
Yeah, absolutely. Yeah, and I know I'm getting those, you know, private, again, you know, just call our office, you know, set up an appointment, you know, with us, because I am getting some private messages about, hey, what about this? What about that? So it's going to be questions that will last a little bit longer too. So
yeah. And normally a lot of, like Anisha's saying, normally a lot of the questions are a personalized situation, like you've got money located here, and things like that. So it's better for you to jump on a discovery call with us, and we can walk you.
You know, I'm going to answer a question that I just got to, which might be a good question. Is so obviously, like, you know, you might have friends or family that are interested in the fund. We are in, you know, South Florida. So we have a lot of international friends, including like, my wife's from Colombia, Jason's wife's from Venezuela, and they want to get their money out of their countries and invest. There is a way to actually still invest in the fund. You could set up a foreign corporation. Jose Ramirez from Advanced Tax Advisors could set up, as long as you have a tax EIN number, you could still put money into the fund. And there are some other ways, and that's getting to more advanced strategies. So that might be an option too. So don't think just because you're or your money might be overseas, you might be selling property and you want to put it in a vehicle here. I have an investor right now, that's exactly what they're doing. They moved a couple $1 million into the US. They're not sure where they want to be, what they want to put in. So they're looking to put a 250 to 500,000 into the fund until they figure out what they're going to do with the other money. So I think that's a big question that, so international money is fine. We just have to structure it, with a US corporation with a tax ID number too. So.
All
I'm
right.
not sure. Yeah, so I think that is, all the questions, another 90 minutes with us, which I love you guys, for always spending time with us. I remember in April, we will have an in-person meeting. I know some of you guys were in our January meeting. We had well over 150 people. So, we're going to be doing some fun stuff throughout with BPM RIA. Jason, you got any last words that
No, thank you for joining us today. And don't forget, just adding, remember, we do have a 1031 process of investment properties. So reach out to us and we'll consult with you with that on how that's deferred. Other than that, thank you for being here. Taryn?
No, it was great being with everybody today. Thank you so much for joining us on a Tuesday after a very long weekend.
Yeah, and
go ahead.
Go ahead. And I'm sorry. Yeah, no. And what I was going to say, the last thing for me personally is that I know we threw a bunch of terminology out there today that you might be like, what the heck? 1031, self-directed, all that other stuff. It's okay. Like I can't breathe kind of thing. So don't let all the verbiage, all these strategies keep you from doing nothing. And we're here to help you to, it might be just one strategy. Taryn, I, myself, Jason, it took years of experience. I mean, combined, we probably, I don't want to say how many years of experience. This is gonna make me sound old.
Yeah,
between us, there's probably, about like, I would say between us, probably about 50 years of experience. Definitely hundreds of millions of dollars of transactions, real estate transactions. We did not learn these strategies, overnight. I'm still learning too. So listen, one of the things is that you can't afford not to be in action, in whatever you're doing in your investing career, right? Whether it's our fund, buying houses, whatever that is, you got to be in action. And I think it's just really important. I don't want to see you in a couple of years and I say, hey, did you do this? And you're still waiting on the sidelines. Don't let, the other people in your life hold you back.
Time is an essence. Time is ticking. And every day that goes by without making smart investments, you're losing. And we only have so much time in this life. So think about it.
Absolutely. So thank you guys. Again, our goal is to make retirement simple again. And I'll see you at our next workshop, which will be actually Wednesday. It's going to be Taryn and I doing some creative financing. And we're going to show you how to build some cash flow magically. No, not magically. No, we're going to show you how to create cash flow. And that way you can put your cash that you're sitting on the side into our fund. So thanks, guys. We'll see you guys soon. Appreciate it.
Bye, everybody.
Bye-bye. Thank you for being here.